Welcome into another one of my mortgage videos. I'm Chad Anderson. Thanks for joining my channel. Please like, subscribe, follow, click the bell, DM, comment, whatever you can do. Truly appreciate all that. And those of you who have joined this channel just over the last month and some of the traction and the ground we've made up on kind of being behind. So thank you for that. All right. Today on the mortgage side, we're going to talk about loan disclosures, which is super boring. But the biggest one that always comes up is somebody says, I don't want to sign this. This is wrong. Fix it and then send it back to me. Here's how loan disclosures work. And this is going to seem back asswards, but this is the truth and this is how it works. So, generally, if you're working with me, I'm going to have you go online and you're going to fill out a loan application on my website. I'm going to get a notification that you started your application, and then I'm going to get a notification in my email that you finished your loan application. Once that's done, I'm going to give you a call. I'm going to review it first, and I'm going to give you a call back. I'm going to say, hey, everything looks good, or hey, we got to work on some things. But we kind of go over it. Now, I'll be frank, we don't go over line by line by line by line. I do ask questions, but it would take forever, just to be upfront, to go over every single question. That's why you fill it out online. We review it. We take a look at it. We make sure that you qualify, and we're running the approval based on what you tell us. So, if some things are omitted or whatnot, or we don't change something or we don't update something, again, it's because we're assuming you're telling us. Now, there are also other things that we won't know right away. For example, we may put in, or you may put in, that you make $7,000 a month. Well, maybe that number is actually $6,874 a month for whatever reason. When that happens, we update it later in the process once we do an actual underwriter's calculation. So, to go back to the original point, on your loan disclosures, once we review it with you, we tell you you're good. And whether you're refinancing, we move forward, or you're under contract to buy a home, we get the contract agreement. We put everything into the system, and we put in your interest rate and your closing costs and your cash to close and your payment and all these things. And we send it to you in your email. Now, you're going to get it in your email. And most of the time, I think 99.99% of mortgage companies now, you will electronically sign your loan disclosures just in your email. It's very simple. And that's the way technology is today. You just e-sign. You just click, 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 all the way through about 70 pages of stuff. Now, what happens every now and then is somebody says, hey, this is wrong. This wasn't checked correctly. The real estate property that we own over here is actually a townhome, not a single family detached. Hey, I don't think it's worth that much. Oh, hey, I didn't put my bonus income in. Oh, hey, we have three kids. For some reason, it only took two. Just all these little things, whether it's minor or major, those things could be errors, not on purpose. It could just be simple oversights or slight, typos, whatever the case is. But when those happen, people say all the time, hey, change all that stuff and send me new ones. Well, the initial loan disclosures are being sent to you because that's how the loan was applied for. That's what you entered in. We went over some things. I corrected maybe some things on the application, and then we sent them off to you. And that's what is going to be signed to move forward. Now, if things are going to change or need to be changed, that's okay. They'll be done during the process. The problem is, a lot of times people, and I understand why, but they start to freak out. They lose their mind. Like, well, I don't want to sign these. These are incorrect. I'm not signing it. It's wrong. Again, it's just the initial loan application. People kind of get that confused. When you sign that initial loan application, you're not closing on the home. You're not signing final documents that you're bound to and that you can, never change. Everything's being done in good faith. Even if we have to update something in the loan application, that can be done before we even go to underwriting. And they'll see the initial, what's called a 1003 loan application, as what was originally submitted. And then they'll also see the updated information in the system. And then at closing, you sign a final application, which should have all the I's dotted and the T's crossed, and is what is more like, all right, this is it. This is our final approval based here. So again, the initial application, initial loan disclosures no need to fret. If they are incorrect, we're assuming it's not malicious here. Everything hopefully is done in good faith. Then it's a simple change and that's it. And then the underwriter will see both. Everything will be okay. And at closing, you'll want those to be accurate. Same thing goes for, and this is a whole nother video and argument that we'll put up on this channel some point soon, is loan estimates and closing disclosures. Now, it's one thing for people um, to get a loan application and your business address is wrong or your work title is wrong, job title is wrong. That's one thing. For numbers to be wrong, that's a different level of trust. Now, again, when you get the initial disclosures, the loan estimate is in there. It breaks down how much you're putting down, what your payment's going to be, what your rate is, what the closing costs are, how much cash you owe at the closing table. It breaks all that down. Even if you sign it, you're not committed to that loan. You don't have to move forward with that loan. You can back out at any given time. However, if there's a lender just always saying, just trust me, it'll be fine, I'm going to take care of this later, red flags, alerts, sirens should start going off in your head. I'm not saying that there's not valid reasons every now and then for that explanation, but again, different level of trust as to what's the explanation for why this is going to change. What's the explanation for this being higher than I anticipated, or not what I anticipated? And then you still got to go through the process. So you're kind of hanging on to hope that it's going to get fixed later. The closing disclosure, again, there's an initial closing disclosure and then the closing document. The initial one, okay, comes to you 3 days before closing. If that's wrong, believe it or not, it's actually okay. It is. It's actually okay because it can get fixed at closing. Things can't go up unless it's in a certain bucket and it's redisclosed to you in advance. But things can go down. So again, if you're still hearing it'll be fine at closing, what you're trying to avoid is getting to the closing table and somebody pulling the rug. That's what you're trying to avoid. And then they put you in a weird spot where they say, well, if you want the house, you got to sign it and close today. Otherwise, you're just not going to get the house. That's terrible ethics. Unfortunately, it does happen, called the bait and switch. But we do see it from time to time out there. So you just got to be careful with that. You got to make sure you understand who you're working with. How much do you trust them? Who referred them to you? Do you think they're telling the truth? Can other people vouch for them? You got a lot of questions you got to ask. But to circle back, the original point, the initial loan application, the loan estimate, the closing disclosure, if they're slightly off, it's still okay to sign or to acknowledge, because it doesn't tie you down to anything. And there are instances where those can be a little bit off or a little bit incorrect, and they do get fixed for the final closing. But I understand that can make people who don't do this every day uneasy. And when you're asked to sign something that you don't think is right, I get that. But in our industry, certain things are constantly changing throughout the process, and you can't continue that process until one step is complete, even if it's slightly inaccurate. So just ask the right questions. Make sure you have a good relationship. Make sure you're working with somebody that you trust, who has experience, who's been through the hoopla many, many times. And that'll probably help calm your nerves throughout the process. But at the end, the final closing disclosure, when you're sitting with the notary or the attorney or whoever it is, you better make sure those are correct, because that's what you're signing up for with hundreds of thousands of dollars of debt. So make sure those are accurate. All right, that's it. So again, don't don't freak out. It'll be okay. But know who you're working with. Thanks for watching. Like, subscribe, follow, DM, hit the bell, comment, whatever you got. Reach out to me. Website over here, there. Yep, chadwickanderson.com. Chad@chadwickanderson.com if you'd like to shoot out an email as well. Thanks for hanging out. We'll see you on the next video.